Brent Verkus here on July 15th during a rotten stock market. The market is down 230 points. The Nasdaq's down 60. I'm here to give you our weekly stock analysis. Nonetheless, in this case, we're going to take a look at Salesforce.com, a company that the Market Timing Academy has owned a number of times throughout the last 3 years. Now, Salesforce.com provides on-demand customer relationship management software applications to businesses and individuals. What that is that's database management software. Now, what Salesforce.com does differently is they offer this to businesses through what's called clouds on the internet. Cloud computing is a term that you're going to hear a lot about over the next 5-10 years. It's really a trend in technology. But what that means is that the businesses access the Salesforce.com software through a cloud on the internet. So what that does for businesses is it allows them to reduce the amount of storage space that they need to maintain on premise with their computer system and let somebody else do it. They outsource it. And then it also allows them to get real-time access to the updates on the software because it's constantly updated via the cloud, so they're being delivered that automatically. Now, for the company like Salesforce.com, why this is important to them is they're able to charge a subscription agreement, not just sell the software. And so what that does is it creates recurring revenues to the business, which is a key to really trying to evaluate a company's stability. You want to know how much of their revenues are recurring versus one-time sales. So if we take a look at our tool here, the IBD Stock Checkup, you'll see that Salesforce.com has a 99 rating, which means that it is the best in its group. Okay, the relative strength for the company is a 96, which means it again is the best in the group. Now, a couple I guess lukewarm things is the earnings per share ranking is 90, which means that it's 7th in the group, and its SMR rating is an A, which means that it's 13th in the group. Not bad. The real red flag here is the accumulation distribution rating is a B-, which puts it 23rd. Now, as long as you're in an A, B, or C ranking within the accumulation distribution rating, we're okay with it. But let's take a look at a couple of the fundamentals here so that you can see some of the trends that are going on. One red flag is its earnings per share percentage change from last quarter is only up 7%. We typically like to see that at 25% or more, but the last 3 quarters earnings per share growth is up 50%, so that's very strong. Now, one thing that we are noticing is some of the estimates out there with the analysts are going down. They did have one downgrade here recently, so clearly there's some caution being shown by the analysts, and that's really due to, you know, again, a struggling economy right now. But 3-year earnings per share growth up 195%, sales up 24%, and I know sales has been accelerating. But most importantly, on the supply and demand side of the equation, you've got a change in funds owning the stock up 4%, and then you've got increased institutional sponsorship with the stock as well. So the bottom line is the institutions are buying the stock, which is what you want to see as an investor. And then also the final note on the fundamentals is management owns 12% of this stock, so management has a vested interest to really keep this thing moving. So now let's take a look at the charts to see what we should do with this thing. Okay, now taking a look at the chart for Salesforce.com, we're going to look at the daily chart from the period of January 2009 through September, or through today, I should say, July 15th of 2010. Now, what you can see here is this stock has been in a very strong uptrend over the past year. You can see a nice little channel that's formed here. Now, as you know, what we look for when we've got an upward trending stock is you look for these basing patterns. For example, you had a very nice cup with handle that went right through here, where you had a buy opportunity on this stock right through this area here. And since then, the stock's been bouncing around. Now, the important thing that I want you to note is it's been bouncing off of the 10-week moving average, which are historically good buy points for stocks after they break out of a base. All the way through, they get through about their 3rd base in the uptrend. Then you need to be a little careful. But again, what we've got is a stock that's in a very good uptrend that came out of a nice cup with handle base. And you see the stock starting to bounce off of its 10-week moving average. So it's forming a nice secondary channel right here. If I show you this, I'll just draw it in here once for you. A nice secondary channel right through here. So what we can do at this point, if you don't already own the stock, is look to acquire it, as it's bouncing off of its 10-week moving average, or after it breaks out through perhaps another base up in this area. But the important thing to note is watch the volume. And now there's a little red flag here. You'll see the volume has been down on this stock, and so the bounces that it's had off of the 10-week moving average are bouncing off of lower volume, which is again a red flag. So a lot of this, in my opinion, is attributed to the fact that the stock market's been kind of nasty here for the last couple weeks, and the fact that this stock is holding up is a big positive, where the market itself has really rolled over. But again, bottom line, if you're going to enter this stock, enter it between the 10-week moving average and its breakout point, but no higher than 5% above its breakout point. And show caution that the volume hasn't been that strong, and so you're going to really want to keep your stops in tight if you move on this stock, and make sure that you keep your eye on the overall market. And if the market moves from a confirmed uptrend, which it has begun here just recently, if it goes from that to a confirmed downtrend, do not buy at all. But as long as we're in a confirmed uptrend, you can look at this stock, but just keep your stops really tight. That's the way we're going to play this one. So this is Brent Verkus with your weekly stock analysis. Make it a great week.